Nvidia just reported 58 cents versus 70 cents expected, so missed big, but revenue came in higher than expected, 5.93 billion versus 5.8 billion. This is the chip market. They do the best graphics card. I have them in my gaming laptop, even though I don't game. I use it for a bunch of other stuff. Not YouPorn, don't worry. Mo. Nvidia, didn't Nvidia and Microsoft team up on something?
They did. I'm looking for it right here. Nvidia teams up with Microsoft to build massive cloud AI computer.
Okay, so Nvidia is one of these chip stocks that has absolutely skyrocketed in the last year.
They went to a high of $346.47
on November 21st, 2021, 1 year ago, 5 days from now. That's incredible. It's now, and it hit a 52-week low of 108, which was recently. It's back up to 155. We have a 15-minute delay on our data, so it's still showing 2.5%. What's NVIDIA after hours?
It is currently up 3.26%.
Okay, so they must be guiding a little bit better along the way. All right, guys, so this is a company with a $400 billion market cap, and guess what? Enterprise value of 414, so very little debt. When you see a discrepancy between market cap and enterprise value, when enterprise value is higher, it's essentially the debt number, okay? Now, if you're new to this channel, we're value investors. We really actually are value investors, unlike the other hype losers out there on YouTube. Just because you have a camera doesn't make you smart. We have a process that works, that's very consistent with actual value investors. When people, we have followers on our channel who say they're value investors, then I hear them talk, I'm like, you're not a value investor. What we're trying to do here is buy $1 for a lot less, making reasonable assumptions on the future. So we look at a company like Nvidia. Whenever we see a chart like this, it scares us. Whenever we see young kids loving a stock, it scares us. We want to look when the market price and the intrinsic value of the business are disconnected. When Mr. Market's willing to sell us shares for much lower than we think the intrinsic value for the business is. We couldn't care less about these quarter-to-quarter results. We want to listen on a quarter-to-quarter basis to see, has our overall thesis changed? Yep. So we're going to go through the 8 pillars here. I highly recommend, if you like this, to subscribe to our channel because we do videos like this every single day, 2 or 3 videos a day. And during earnings seasons, we're the fastest. I literally have other YouTubers go, how do you get videos out so fast? Well, we have a crew, we have a setup. This is the whole business here. So that's why we have it. So let's go look at our 8 pillars on NVIDIA. Okay. Oh, Boise. 5-year PE, 5-year price of free cash flow, 76 and 80.
A little rich.
Now, guys, if NVIDIA was going to grow at 40% a year for the next 10 years, we'd be like, lock it down.
Jim Cramer said it's going to be a $10 trillion company in a decade.
Isn't this the one that he said, it's the whole video about it?
Yeah.
So Jim Cramer has a video where in a span of 5 months, he went NVIDIA to the moon to, at the very end, he's saying, I'm short, this is garbage, I'm short NVIDIA. This is not investing. Nope. That is just charts, and I'm fine with that.
Not even charts, that's just following stock price.
Well, that's charts.
Well, I don't think
get what you're saying. Yeah,
he's on anything.
Yeah, you're right.
The price is going up.
Yeah,
Good.
Jim Cramer is also an idiot. So what do the analyst estimates think about the future of NVIDIA? All right, they expect a drop, which makes sense, guys. There was a big surge in freaking chips over the last year. It wasn't sustainable. We've been saying this on the channel for a long time. Shipping, chips, cars, all these things, home prices, home sales, they cannot sustain themselves at this level forever.
Look at this revenue growth. 12 billion, 10 billion, 15 billion, and then 24 billion and 31 billion.
Are they guiding for next year? What are they guiding for next year on revenue?
Let's check it out.
That's something I want to see what NVIDIA is saying in these, because I want to sit there and show people like, hey, maybe they can continue it. I don't know. They're going to say somewhere in there, oh, they're going to pay its next quarterly cash dividend of 4 cents per share.
Yeah, why bother?
Yeah,
here we
thanks.
go. Outlook. Revenue is expected to be $6 billion. That's
in the final quarter.
Yep.
What about for the full year?
Do they have full year guidance here? They do not have full year guidance here.
Oh, fourth quarter of fiscal. Okay, gotcha. Yeah. Well, look for that.
Yeah.
But look at their EPS. They're still expected to more than double EPS in the next 5 years. So my question to you is, if you believe this number, should you care about quarter-to-quarter results?
Not at all.
No. What do you care if they miss by a penny each time? Miss by a penny every quarter. Who cares?
Better for you.
It's better for you because then people will overreact, sell off the stock like crazy, and you'll be able to buy shares much cheaper. Okay? Now, let's go to the revenue expectations. Analysts are still expecting big revenue growth. Almost doubling to $51 billion next 4 or 5 years. That's low to mid double digits. And EPS growth of really high numbers, 20, 30, 35%. This 8 pillars, look at this. They issued, if I were them, I would have issued 30%, 34%
exactly.
stock.
I actually looked at their share. I didn't look at the 8 pillars. I scrolled down here and I was like, why aren't they issuing more shares down here? They should have been issuing shares like crazy.
So for those of you who don't know what we're talking about here, we want companies to keep shares the same and only issue shares if it's so expensive. I'd rather have you do that than take on debt, because you're giving overpriced shares to the market and getting that cash, and you don't owe anything back. But when the stock is cheap, I don't want them buying shares back. So I'm glad that I want them buying shares back when the stock is cheap. Right. So I'm glad that Nvidia was not buying back shares, because a lot of companies just buy back shares to boost that earnings per share, even though what they're doing is they're buying back their expensive shares. I don't like that. All right. So let's use our little stock analyzer tool. What we're going to do here, the stock analyzer tool is what we use to sit there and figure out what intrinsic value is for the business. Now, it's useful for companies where we have a reasonable idea of what the future is going to look like. So in Nvidia, do I think Nvidia is going to be around for in the next 10 years?
Yes.
Absolutely. It's been around for a long time. 2, and they have low debt also, so it's going to be hard to go bankrupt. 2, do I think they're going to make more revenue and profit in 10 years from now than today?
Yes.
Mo, what would you say?
I would say yes.
I agree with that too. Number 3, can I pay a reasonable price today for that revenue and profit over the next 10 years and the value of the company 10 years from now? And that's what we're here to use Stock Analyzer tool for. We have to figure out what a reasonable value is. So Mo and I are going to do it separate. We're going to be a little bit talking a little out loud, not really. I'll probably do more talking than Mo.
Okay.
So revenue growth, Mo, if you remember, analysts were expecting for the next 5 years, mid-double digit, mid-teens.
Right. Okay.
All right. So, okay. Remember, the chip industry is supposed to grow to 12% a year for the next 10 years.
Right.
Profit margin. Okay. Oh, PE. That's sick. Okay, I'm done with my estimates.
Almost done.
And the stock is currently at 163. Actually, after hours, it's higher than that now. No, it's 163. Sorry, that's including the after hours.
Okay, yeah, right now it's up 1.62, 161.
Okay.
Okay.
So, Mo. Oh,
Let's see.
I did 8, 14, 20.
I thought you might go crazy on the high side.
Yeah, because I think the chip market is one of those things we don't know. It could grow crazy.
Yeah.
What'd you do?
7, 10, and 13.
Okay. Profit margin. I did 22, 25, 28.
23, 26, 29.
Okay. Same with free cash flow. I did the exact same thing.
Same.
I did 14, 16, 18 for
Exact
PE
same for
and
me.
price of free cash flow.
Yep.
And for desired annual return, so look at that. Since I went so high on the high side, I wanted a big number here. I did 12 and a half, 15, 17 and a half.
And I went 12 and a half, 13 and a half, 14 and a half. But that makes sense.
So to explain that to everybody who's watching who's new. So remember, if you're new and you like this so far as a way to explain why stocks go up and down, the higher my assumptions, the bigger desired return I want, because it's less likely to happen. My desired return is essentially my margin of safety, right?
Yep.
So the higher my assumptions, the more margin of safety I need, the higher return I need. I hit the analyze button. Boom. All right, I got a low price of 47, high of 115, middle price of 75. It's currently on my watch list at $75.
Yep. I got a low end of about, call it 46, high end of 90, watch list at 80.
All right, so it just screams overpriced here right now. Guys, look at this, 20% revenue growth for the next 10 years. Think about that math real quick. Mo, what are they doing? What did they do in revenue in the last 12 months?
The last 12 months, 30.92 billion. Call it 30.
It would take them to $191 billion in revenue at 20% increase, and it's still saying overpriced. And it's still saying overpriced today. Yep. Guys, in the long run, stocks will do what the fundamentals show. We just did a video on Cisco. Look at Cisco's chart. This is a company that couldn't miss. And look at their all-time chart. Their high was $82 back in 2000, 22 and a half years ago. They have not hit it since. But since then, revenue has gone from 12 billion to 50 billion. That's 4 times more. And their profit is up 3 or 4 times. And yet the stock is down from the all-time high. Why? Because fundamentals didn't work here.
This could be one of those, NVIDIA could be one of those companies when we're making a video in 2040 saying, remember when NVIDIA was here?
300 and
It
some
still
dollars.
hasn't touched that price.
Yep, it could be.
Yeah.
We don't know. So guys, subscribe to the channel if you like this video. We know what we're talking about. We don't believe that just because we have a popular YouTube channel that we are smart. We have a process, and that's what makes us good investors, and we manage the emotions a lot better than most. That's what it takes. So subscribe to the channel. Thank you very much for your time. There are more videos to come. Take care.